You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program where we break down the ever-exciting, ever-evolving world of crypto. So Bitcoin, but everything else, ETH, Litecoin, XRP, and a whole bunch of other crazy tokens and digital assets out there. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting Options Insider Radio Network. Apologize for the no live show last week, but of course we were down gearing up for the big options industry conference, and hopefully you've been enjoying the slew of content that it has been heading your way, and much more still to come from that conference. Dozens of conversations we had with a variety of people in the space. Also, all the panel stuff coming your way as well. So if you couldn't make it down to Miami, I know a lot of you couldn't, don't worry. We got you covered. We're bringing it all to you. That's how nice we are. So stay tuned to the network. And if you just subscribe to this show, maybe you're a new listener to the network and you like yourselves a little bit of crypto. We get it. But you want to make sure you want to check out the full network to get all of that good stuff heading your way. Speaking of good stuff, we got a great conversation in store for you today. So let's get right on into the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat. This is the portion of the show where we welcome on guests from throughout the world of crypto and crypto derivatives and proceed to pick their brains because it's fun. And because you guys out there like it, you learn a little bit about the space and what's going on out there. And today's guest is a newcomer to the program and indeed to the network. He is Matt Trudeau, the Chief Strategy Officer over there at ErisX. Matt, welcome to the Crypto Rundown.
Thank you, Mark. It's a pleasure to be here.
And Matt, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give us a little bit of an overview on your background in the derivatives and indeed the crypto space, and how you found your way to becoming the Chief Strategy Officer at ErisX.
Sure. Thanks, Mark. So my background is electronic trading, approximately, well, I guess it's coming up on almost 20 years in the industry. The first half of that was primarily with brokerage firms, so retail and institutional equities brokers, though I did have some exposure to options and futures during my tenures, including stints with CyberTrader, which was a subsidiary of the Charles Schwab Corporation, Instinet, which is an institutional agency broker. The second half of that 20 years was focused more on marketplace launches and operations. So ErisX, actually, when we went live with our spot market, was the 11th market that I've been a part of launching or responsible for launching, including the Instinet CBX platforms in the U.S., Europe, and Asia when they replatformed onto a new technology stack, marketplaces under the Chi-X global umbrella, including equities platforms in Canada, Japan, Australia, and Singapore. I was part of the early team at IEX, the Investors Exchange, launching their equities ATS and then eventually fully licensed U.S. securities exchange. And then most recently, before joining ErisX, I was the co-founder and president of a company called TradeWin, where we used IEX's exchange technology to launch an electronic exchange and blockchain-based post-trade system for digitizing physical precious metals. So a long history in the electronic trading world, and then a lot of exposure to and experience with launching electronic markets. I met Tom Chippis, the CEO, when he was at Axoni, another blockchain technology company. And when he joined ErisX, we got to talking, and we decided it would make sense for me to join as Chief Strategy Officer. So I started back in December of last year.
Interesting. So you're kind of like the go-to hired gun for launching a new electronic exchange. It sounds like Matt. So I guess IEX wasn't groundbreaking enough. You wanted to dive into the crypto market, huh?
Well, it's interesting. We one of the things I did at IEX was create their ventures team to look at opportunities outside of U.S. equities. And one of the first projects that I looked at was a crypto exchange back in 2014 that was interested in licensing IEX's exchange technology. So that was my first introduction to Bitcoin specifically, but crypto and blockchain technology more broadly. And from that point, I was hooked and just continued to be very, very interested in the space and seek to get further involved, including up until launching TradeWind and then eventually making it over here to ErisX.
It's always fascinating to me whenever I bring someone on this show. I always ask them what was their moment, their eureka moment when they kind of first really came to grips with crypto. Sounds like yours was through IEX, which is kind of interesting. Quick aside, I'm just curious that you have a history with that exchange. That exchange really roared out of the gate. Obviously, the Flash Boys maybe helped, maybe hurt a little bit, gave them a lot of publicity, certainly. Now that you've kind of moved on from there, what are your thoughts on kind of how they're faring in the marketplace right now? They had a lot of Sturm and Drang around them, but it hasn't really translated into a lot of volume. Has that surprised you?
Well, the U.S. equities markets are extremely competitive. I think the latest count of exchanges is somewhere around 13. So it's really, in many ways, the equities market isn't growing. So in many ways, it's a zero-sum game at this point. Any basis points of market share that one exchange gets is at the expense of another exchange. And there are a few different things that create some structural challenges. One is IEX has made a decision not to pay rebates. So in the context where all the other exchanges, for the most part, are paying rebates, it becomes challenging. So, I think that they continue to claw little bits and pieces of market share. So not necessarily a surprise that we always knew, or at least when I was there, we expected that it would be a long climb to claw that market share. So not terribly surprising.
Well, this is your first time on the network, but we have had representatives from ErisX on before. I think the last time was around 6 or 7 months ago. Back in October of last year, we had Ian Greaves on, who's your head of product. So that was interesting timing because it was right around effectively the announcement of what you guys were doing. So it was certainly things were hot and heavy, but now we've had a little bit of time. We've had 6 or so months under your belts to really get things rolling over there. I know you had a big announcement very recently, so why don't you catch us up on what the heck's been going on in ErisX since the last time we chatted with you guys?
Yeah, sure. So we've closed a couple of rounds of financing. So we announced towards the end of last year the closing of the Series B. That was just a little over $27 million. The team has grown pretty substantially. So again, Tom started in September. From that time, we've added a COO, Robert Thrash, a number of other executives, and expanded out the leadership team. The team more broadly has grown fairly substantially, and we've been really heads down focused on building and preparing for the launch of the spot market, which we achieved last week. So we really, I guess, since the last time you talked to Ian, another round of financing that was also announced last week, and then the launch of that spot market. Those are the two of the biggest milestones that we've had so far this year.
So walk us through that. Obviously, we like to talk the derivatives. You kind of have to walk before you can run, so the spot kind of comes first. I'm just curious. Obviously, it just happened a few days ago. Walk us through what that launch was like, if the volume and everything else is meeting your expectations so far, and what are some of your plans for it going forward?
Yeah, so this is an area where it's safe to say that I've got quite a bit of experience having launched a number of different markets. So it's, the expression we like to use is that it's a process, not an event. So the launch day is the day that you officially open for business, but that's not, there's a lot of work that has to happen from there. And so some clients will be ready to go on day one. There's an integration process. So our market is available, both market data and order entry via standardized FIX protocol. And so anyone who wants to trade with us can come in via FIX. It takes a bit of work to do the connectivity and the FIX integration. So everybody works at different paces. We've got some firms that are really quick to turn it around. They get connected in. They're ready to go day one. Then others, it takes a little bit longer. So our expectation was that we would have at least some folks in for day one for a bit of trading. Not that that would be opening the floodgates by any means, but that as time went on, more and more customers would come on, the volumes will grow, the diversity of the participants will continue to grow, and now we're just into the long process of building out an extremely liquid market that we hope will be the center of price discovery for crypto.
And just refresh us, you guys are offering at the start here Bitcoin, Bitcoin Cash, Litecoin, and ETH. Are those pretty much the four products you're offering right now?
That's correct.
So a healthy smattering of the top coins out there. Well, I know our audience is also excited about the impending launch of your futures. I know it's an area that seems interesting. A lot of the light on the space these days, because there are, I often joke on this show that new crypto derivatives exchanges are a dime a dozen. We literally get approached by, seems like 5 at every different event we go to, and they're all different. So there are quite a few. You guys are kind of leading out the gate with a lot of support, and we'll get to all that in a little bit. But it also seems like a lot of the trajectory in the space is leading towards, the physically settled type of products as well. So walk us through that. I know you're still kind of in a bit of a regulatory limbo on that, but what is the latest on the status of the futures?
Sure. So we've got, as part of the legacy ErisX exchange business, we have a DCM license, a designated contract market license for the CFTC, and that will be repurposed for eventually the futures exchange. And we're now in the process of our application for the DCO, or Derivatives Clearing Organization license, that will allow us to operate the regulated clearinghouse. We were slowed down a bit by the government shutdown. But otherwise, the processes were in process, and we've been pleased with the degree of rigor and depth of analysis from the CFTC. Not much more that we can say, as we are in process on it at this point, but we're fairly pleased with where we are.
Do you have some sort of insight you could share with our listeners? You expect it by probably Q3, Q4? What are you looking at? What is your expectation?
We don't have a specific date for the DCO approval, but our plan right now is we'd like to have the futures market launched by the end of the year.
So at least to those of us people out there who are bugging us, wanting to know when they could hopefully see more derivatives, hopefully by the end of the year. I mentioned earlier, kind of half jokingly, but really only half jokingly, there are quite a few players in the crypto derivatives exchange space. You've got, of course, you guys. You've got, of course, the CME, formerly SIBO, who have now since kind of left the space, at least for the time being. You have, of course, Backed kind of hanging in the regulatory ether as well. You got LXDX, LedgerX. I could keep going for quite a while, but it is a surprisingly competitive landscape that you guys find yourselves in. What are your thoughts on that? Obviously, you played in competitive spaces before, the equity space, pretty competitive, so maybe it's not new to you. But still, what are your thoughts on just how quickly the derivatives, in particular, the derivatives exchange portion of the crypto space, how it just got so competitive and so crowded so quickly?
Well, I think when you see competition along the lines of what we're seeing, it's in some ways it's good because it's validating. You don't really ever want to be the only company or the only person working on something, because it may not necessarily indicate that you've got some genius insight. It may indicate that there really isn't an opportunity. So the emergence of the competition measured in that way is a good thing. And I would say that, at least for me personally, as I evaluated ErisX's strategic position in the market and thinking about coming over here, there are a number of things that I think the company has done extremely well that position it with extremely strongly for the emergence of the competition and the future of the market. So on the one hand, you've got an organization that does have some history. So the legacy business had been in operation for, I believe, about 8 years. You've got a senior leadership team here that has deep domain expertise and experience in electronic trading, in capital markets, in futures, in exchange launch and operations. And I found that conceptually, there's often a tendency to underestimate just how challenging it can be to build an exchange. So setting up the technology and creating a great performance system these days, if you've got the time and the money, you can typically find the talent and you can build it. But that doesn't necessarily mean that people are going to show up and trade on your marketplace. And so the liquidity equation, that chicken and egg of a new market, is probably the single biggest challenge that anyone hoping to build a two-sided market can face. And then that's where I think it's really interesting if you look at our cap table. So we've got investors that represent a cross-section of the industry, from liquidity providers along the lines of DRW and Virtu, Susquehanna, so some of the principal trading firms. And then on the liquidity demand side, some of our investors include, for example, TD Ameritrade and Fidelity on TradeStation. So, and then you add into that let's call it the industrial side of the equation, which is Bitmain is a mining company and Consensus is one of the industry consultancy type firms. We've got a nice mix of players that will represent both the liquidity supply and demand side of the equation. And so to the extent that they represent strategic investors, I find that to be extremely differentiating vis-a-vis some of the other platforms that we're competing with.
Yes, it is fascinating to watch. And you mentioned the cap table. That's a good point. When people come to me and they ask me about my thoughts on the different venues and how things shake out, I always point to that as a big differentiator for you guys, because you're kind of doing it the way it has been done, the traditional way in the capital market space, which is when you launch a new venue, you go out and you give up pieces to sell pieces of it to different people who can provide different vested interests, order flow, all types of other things like that. That's how you get a new venue off the ground. And that's just the way it's traditionally been done. I've talked to a lot of these other players in the space, the new startups, derivatives, exchanges, and they tend to balk at that. Maybe they don't like the notion of payment for flow or some of the entangling alliances that come from having these people owning different pieces of your venue. They want to try to keep things on a different level. And I've talked about them about how, that's a challenge, because people at the end of the day, they want to have some sort of incentive to route flow to your venue. And you mentioned, of course, that catch-22, that chicken or egg. That is the delicate dance that every new venue has to do, or every new product has to do when they're first starting up. You have to bring people to the water, but they won't drink until they see a lot of water going. There's not a lot of water going, of course, until people are actually playing or participating in the marketplace. So it is a bit of a delicate dance. It does seem like you guys are ahead of the game when it comes to the firms. You mentioned a bunch of them. TD, SIBO has a vested piece in that as well. Susquehanna, of course, some firms who have trades. So you have trading expertise, people who can provide order flow, people who can provide a lot of exchange expertise. It does seem like you structured your caps table not just to raise money, obviously that's the focus, but also there was a bit of strategy in there as well, Matt. Would you say that was part of the order of business when you're out there raising money? You weren't just shaking your cup to anybody. You were out there really trying to find partners who could invest and also provide something else in terms of partnership with the venue. Is that fair to say there, Matt?
Yeah, I would say that if you look at where we've gone, let's say, to more traditional VC or private equity, even in those cases, whether it's Valor or Castle Island Ventures, we've looked for firms that we thought had some subject matter expertise or something where they could bring some value to the table. There is one point, though, that one thing that you said that I did want to address, which is, there can be, so when you look at managing a cap table like this, it's extremely important as a marketplace that you have very clear rules of the road and that you're transparent in the way that you operate your business. And that's really to manage any potential or perceived conflicts of interest. So we have a rule book that we will operate in accordance with when and as we become a regulated futures exchange and clearinghouse. But one of the things that we are doing, which I think is also differentiating, is that we're taking that same rule book, and while we don't have any specific obligation to do so, we're going to operate, or we are, operating the spot market according to that same rule book. And really what that does is defines very clearly what the rights and obligations are of all the participants, and effectively everybody comes in on an equal footing. So while we do have strategic investors, they don't get preferential treatment, let's say, in their trading on the market. They participate just like everybody else.
Well, it's interesting to see, and I'm glad you brought that up, because that is a point of contention for a lot of venues, and I know certainly for the crypto space, they like to lean away from those types of entanglements. So I'm glad to hear that you guys have a roadmap in place. Speaking of, what's going on in the space, last time we caught up with you guys, right after your launch, it was somewhat inauspicious timing for you guys launching a new crypto venue right pretty much into the teeth of an extended bear market in the broad crypto space. Of course, since you launched in the subsequent 6 or so months, that bear market continued, and it continued fairly aggressively. And then, lo and behold, in the last month or so, we've seen a nice, strong resurgence out there across Bitcoin and a lot of the other crypto products out there. I'm just curious for you guys, maybe internally, the morale of the team, maybe, of course, externally as well, getting more partners and players excited to work with and partner on you guys. What is the last month's, turnaround in the crypto space? What has that done for you guys? Are people reaching out to you again with a new fervor maybe they didn't have a couple of months ago? How has that energized what you guys are doing?
Well, it absolutely has energized things, but I think we take a much longer view of the time horizon here. So we don't really focus too much on the price of Bitcoin. Certainly more interest in the market and the market recovering a bit does reinvigorate maybe across the board. But I think the team here is really looking at this as 5 to 10 year play, and we're long-term believers in the capabilities of this technology and many of the exciting things that are not really even able to be realized just yet, because the technology in some instances has a little bit more work to do to mature. But I think what's been really exciting for us is to see not only the work that we're doing here to really professionalize the market and launch a crypto exchange that brings with it the reliability and performance of what's almost started to become taken for granted in many other asset classes, and to bring that to crypto. But also, as we look at the firms that we're going to be working with or are working with, as far as our customers and the level of maturity around their processes and procedures, the insight, the depth of analysis, the technology work that they're doing. So what we see is this whole constellation of firms and technology and operational processes and procedures all maturing and all progressing in a way that it feels like we're now finally getting to a point where the fundamentals of this market, the foundational elements of it, the foundational infrastructure is coming into place. And that really is the part that we look forward to building off of and from as the market develops into the future. So those are the things that we think are absolutely necessary for this market to thrive and grow over the course of the next 5 to 10 years. And maybe the bear market, or the crypto winter as they call it, gave everybody a little bit of a breather to pay down some technical or operational debt, and certainly gave us an opportunity to build into our launch in a way that allowed us to create an extremely robust marketplace and team. So it certainly is exciting. The timing is nicely coincidental, but it definitely is reinvigorating. Though I would say that our excitement hasn't ebbed at all in the build-up and launch of this market.
I like that, the crypto winter. I may have to borrow that on occasion. I think it probably has something to do with a little bit of a big show coming back, maybe as well, the winter terminology. But I like it nonetheless. Well, you kind of mentioned some of the interest on the firms as well. That's kind of an interesting, contentious point we've been hearing on the show as well. The drumbeat, of course, all of 2017 into, let's say, the first half of 2018, the institutions couldn't get enough crypto. Everyone was manning up and staffing up, talking crypto. Then the Bitcoin, I should say the bear market in Bitcoin continued and all their cryptos, and it seemed like it maybe diminished a little bit. And then we've heard some conflicting reports on this show since we launched at the beginning of the year about what is really going on in the institutional market in terms of their demand for crypto. Some were saying, they were talking one game in the press, saying we're not interested, we're washing our hands of that. And then behind the scenes, they were ramping up and staffing up and building up functionality to be ready to flip the switch and go live in crypto at some indeterminate date in the future. I'm wondering, Matt, what are you guys hearing there behind the scenes, and what are you seeing behind the scenes? Are institutions, has the demand for crypto, has it remained strong despite the bear market? And has maybe, kind of related to our last question, maybe has the last month, has that maybe energized it at all as well? What are you hearing out there?
Sure. We actually talked about this issue a little bit in a recent blog post where we responded to the question, is institutional interest in the digital asset market dead? And, there have been a lot of headlines in the last few weeks and months that might give you that indication. Various people leaving different firms retrenching from some of their what seem to be institutional efforts. And I think we just see things very differently. And, our perspective, it maybe in some ways is a bit more informed operating in the institutional markets for as long as some of the folks here have. But we didn't expect there to be an instantaneous tsunami of trading flows that would just immediately come in. There's a lot of infrastructure that needs to be put in place. And last year I attended a conference, Crypto Evolved, put on by Viable Markets, and it was the best conference that I went to, I think, all year in terms of just the quality of discussion and people really getting down to the point. And there were a handful of things that came out of that as priorities. One was you really needed to see a proper, fully functioning, robust, performant trading infrastructure that didn't have internal conflicts or even potential conflicts of interest, where it was very clear that there wasn't the exchange wasn't trading principally against its own clients, for example, which is something that is just sort of taken for granted in many other asset classes as being a core part of running a transparent exchange. Custody was another issue that came up. And then finally, regulatory clarity. And if we look at what's been accomplished since last summer, ErisX is bringing to market an institutional-grade operation in terms of the exchange infrastructure. You've got a number of different players, whether it's Fidelity or NYDIG, that are bringing to market institutional-grade custody solutions. And then it feels like we've gotten a decent amount of regulatory clarity, at least as relates to the parts that fall under CFTC jurisdiction. The SEC side is probably a little bit more complicated, depending on the facts and circumstances. But we're getting really checks in the boxes against a lot of those big things that were discussed as being prerequisites for institutional participation. So going back to the point that I made about our partners and our customers doing real work and making real investments, that's the part that we see. And those are really the things that need to happen before the institutional money can start to flow into the market in a real way. If you saw recently, I think Fidelity published a post where they polled some of the institutions, and it doesn't, from indication from that, from the results of that poll, it doesn't appear that the interest is waning at all. In fact, it appears it's growing. So it looks like we're going to have the pieces in place and there to satisfy the demand when it comes in.
So it sounds like you're not fearing the death of institutional crypto. A lot of people seem like, particularly when the SIBO got out of the game, thought, okay, that was it. That was the death knell for institutions. SIBO doesn't see any future here. They're getting out of it. Sounds like you don't feel that's the case there, Matt.
No, we're still very, very long-term bullish on this market.
I would hope so. Otherwise, you're in the wrong business. So that's definitely
glad. This is true. We've put our money where our mouth is. We're betting our careers on where this is going.
Speaking of money, there's been a lot of contentious discussion lately about how much volume, they quote it usually in notional, so in money terms, but how much volume in particular goes up day to day in the crypto space. In fact, there's recent data out of Bitwise that has been very controversial. You know, they of course submitted it in regards to their proposal for an ETF, but effectively alleging that I think their number was 95%. Of the quote-unquote volume we're seeing in the crypto space is somehow fraudulent or fake. I'm sure you guys saw that data. It's kind of been all the talk of the town of late. What are your thoughts on that number? Do you concur with that number, or do you think the percentage is somewhat different?
Well, I don't know if I can speak specifically to the percentages. I mean, I think first of all, that was a fantastic report. I think bringing some actual data to the discussion is a critical contribution, and so I applaud them for that. And reading that report, there were some things that it was pretty remarkable in terms of the observation, because some of the alleged fake volumes were they were in plain sight. It didn't even appear that there was much of an effort to try to obfuscate them. So I think that it wasn't necessarily surprising to us. It filled in with data a lot of what had been discussed for some period of time anecdotally, and having data is much better than having anecdotes. So again, they made a great contribution there. You can quibble with maybe some of the methodology or the approach or the specifics, but just at a high level, it feels like they've certainly isolated a problem. There are a number of exchanges that it feels like, if the world, I guess part of my thinking, and I think that's shared by some of the folks here, is that the world is starting to separate into two camps. So let's say that the first camp is marketplaces that seek out regulation and look to operate with some oversight compliantly, and then maybe another camp that looks to operate to take advantage of the regulatory arbitrage and operate in either light or less or no regulation. And as the market bifurcates in that way, we feel like some of the exchanges that maybe were on the list that didn't appear to have fake volume fall into the camp that seeks regulation, primarily in North America and to some extent Europe. So we feel like we'll be extremely well positioned in that market, and that in many ways that market will become the reference for other things, potentially ETFs in the future, other futures products. And so it's not surprising to us. It's refreshing to see someone actually look at it from a data-centric point of view and start to provide what they believe to be some evidence of things that other people have talked about, again, just in anecdotal terms.
And of course, it puts into stark relief what you guys are doing, because if those initial numbers, those crazy notional numbers people were throwing around back in the day, were to be believed, it's hard to make a dent in those crazy numbers. But if the number is actually much smaller, then what you guys are doing at ErisX could potentially represent a much larger, more significant percent of the pie going forward, which I think is probably more intriguing for you guys, and it gives yourself a little bit more market impact. So that's certainly something I think that's interesting and worth noting as well, Matt.
Agreed. I think we're really just focused on creating the highest quality marketplace that we can, operating with the greatest degree of transparency and with robust controls and oversight so that people can trade confidently. We want to make sure that the market's up and running, that it's resilient. And again, these are things that, having spent almost 20 years in other asset classes, these are things that by and large are just taken for granted today in equities and options and futures, where you just expect that the market's going to be up and running and work, and your asset's not subject to disappearing, and that manipulation will be rooted out, and other malicious activities will be rooted out, and that the exchanges manage the conflicts of interest. So these are things that we think that we will bring into the market in terms of improving it, and that's what we're focused on. And we think that given the choice, given the opportunity, all things being equal, if people know that there are reliable, trustworthy marketplaces, that they will choose to trade on those, given the alternative.
Well, speaking of reliable and trustworthy marketplaces, we could talk ErisX all day, Matt, but we have to keep on rolling, break down what's actually going on in the marketplace. So you stay tuned, have a little beverage, rest your throat while we dive on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down what the heck's going on, what's been trading since our last episode. And of course, we took last week off, so it's been a bit of a run, a bit of time since the last episode, and it's on a bit of a run. We're seeing Bitcoin now up over 400 handles since our last show. We were at around 53.20 on our last episode a few weeks ago coming into Showtime. It was at 57.08, so nearly 400 handle, I should say. And then the 57.38 now coming halfway through Showtime. So we've seen the rally continue. It's up about 1/3% today, but still the Bitcoin bulls out there are happy yet again as this continues to move to the upside, having a little bit of a trouble kind of breaking through that low they hit last year in June of like 57.80. That seems to be a little bit of a resistance on the upside. So people are kind of playing close attention to that level over there in the technicals on Bitcoin to see if they can really break through that 57.80 level and maybe close above it. Then maybe that's a sign that maybe 6,000 is on the way, and if not, it could always drop back down. The 30-day moving average coming into Showtime right around 5,300, a little bit shy of that actually. So if it could always retest that. Of course, that would be a big move to the downside as well. So people watching those two technical indicators. What we like to watch are the volatility and the skew and all that fun stuff. So let's see what's going on. Again, all this data courtesy of our friends over there at SKEW, sk3w.co. I encourage you guys to check it out because it's great data. A, B, it's all free. So you guys can do exactly what we're doing right here. If you did such a thing, you'd realize the realized volatility of Bitcoin has dropped precipitously since our last episode. It was pushing a 70 on our last show. It's about 68. Now coming into this show, it's a little bit north of 40, about 41. So the vol on the realized side, 1 month realized, has come in dramatically since our last show, which is interesting because we have seen some movement out there, but the vol coming in. Also looking at the overall options volume, it's been lighting it up. This is stuff courtesy of Deribit here. The recent volume hasn't exactly been knocking out of the park with a couple of exceptions. The biggest day since our last episode really was the 22nd, right around the last show, was the 22nd of April with about 33 million. Again, this is in notional how they quote this. And then the 2nd of May was also a busy day with about 27.3 million. Most of the rest of the days since our last episode were shy of that, sometimes markedly shy of that 20 million level. So not a ton lighting it up on the options front, but a couple of sparks in there of activity. In terms of the OI, where things are open and lighting it up, I'm looking again across the OI, across the term structure here, where the most action seems to be, where the most contracts are clustered. And as you might imagine, it's pretty much around this at-the-money level where we are right now, right around the 5,000 or so strikes. These are actually a little bit out of the money now, kind of reflects to some of that put interest we've seen and talked about on the show of late. Obviously, it falters off. There is some OI still, probably some legacy stuff around the 15,000 level and a little bit even around 20. So again, very legacy there. But still, the size, most of the over 4,000 or so, contracts and things in that 5K, right around that 5 to 5,500 level in terms of the strikes. In terms of OI on the expiration, which month has the most open interest, it is July, a little bit north of 15,000, looks like about 16, maybe 17,000, followed by September with about, looks like 11 or 12,000, and then the rest all falling in at or below 5,000. The June skew, which we've been keeping an eye on the show of late, looks fairly similar. Looks like a few maybe aberrant prints are twisting things in. Looks like the bid for the puts got a little bit steeper, which isn't surprising as you rally up the skew a little bit. People are looking to maybe lock in some of those rallies and gains. So we're seeing that vol get up to 150 pretty quick, shy of the 5,000 handle, where it was about a max out at around 120 on our last show. So that tail end of the curve there getting a little bit steeper. Also seeing, looks like some prints have gone up north of the 15,000 level because there's all of a sudden a crazy movement on the call wing up there. I'm guessing that's probably a bit of an aberrant print out there. In terms of other prints, let's see what's going on the futures side of the fence. The Bitcoin futures over there at CME, aka the last dog standing, at least on the big listed futures front, having another pretty active day. About 6,000 contracts in that front contract. Again, it's May now. April has rolled off the board, so 6,000 and looks like about 6,300 total going up on the day. Still a pretty active day. Those futures at about 57.05 here, coming into this part of the show. Let's update that a little bit. Here we go. All right, yeah, they're starting to, looks like maybe starting to turn a little bit. Here we go, 57.55. That's where they are right now. Remember that all-time high was back in early April, about 22,500 contracts. Not quite hitting that today, but still a pretty active day for that 5X coin there. You kind of mentioned it earlier there, Matt, but I kind of want to touch on it really quickly. The big news in the crypto space right now, the thing everyone's talking about right now is, you mentioned Fidelity. Fidelity has been rumored and talked about getting into this space. Now we have effectively a concrete date. They're looking to start offering crypto trading within a couple of weeks, effectively. They say they currently have a set of clients they're supporting, and they expect to roll out their services in the coming weeks across this broad spectrum. So interesting stuff. Matt, this is obviously interesting for the space because this is a broad mainstream name that is really getting out there and maybe opening the doors to a broader spectrum of potential clients who want to trade this product. Is this one as exciting for you as it is for a lot of the others to see a big player like this really cutting their teeth in the crypto space, Matt?
Look, I think like everybody, it's exciting to see any one of the big players make announcements about their intentions. It just shows a level of maturity and development of the space that it's hard not to be excited about.
Yeah, I should notice if you're a Fidelity retail customer and you're excited about that, not quite for you guys yet. It's looking at institutions earlier. E-Trade and Robinhood are the ones out there who are still catering to retail. So if you want that, you have to go there. They're still looking at institutional, but I'm sure that will trickle down in the coming weeks and months. Speaking of trickling down, let's trickle on down into our next segment. Let's do a real quick rundown of the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, where we break down the other coins out there, except for now when we break down the market cap. Number one, still going to be Bitcoin for the foreseeable future. That market cap north of 100 billion, now 101. Remember, take some of those numbers with a bit or perhaps a very large grain of salt, depending on your viewpoints on that Bitwise data. But overall, it's still going to be the market cap leader, even if that number is reduced dramatically. Number two, ETH with about 18.5 billion. Number three, XRP. So ETH continuing to outpace XRP. There was a little bit of a jockeying between those two for number two a little while ago. Now ETH has really kind of been on a tear. XRP has had a few headwinds. The JPM coin, other questions around that space, other players in that space, maybe capping some of their recent runs. So hovering around 3 with about a little less than 12.5 billion. Number 4, Bitcoin Cash, about 5.25 billion. And number 5, good old EOS, call it what you will, with about 5.25 billion. So kind of neck and neck there with Bitcoin Cash there for the number 4 spot. Number 6, Litecoin dropped out of the top 5 there with about a little over 4.5 billion there. So Litecoin was a big percentage winner for Q1 at least when it came to crypto, and now at least falling out of the top 5, but still interesting stuff. And speaking of interesting, we talked about Bitcoin kind of on the rally. The rest of the altcoin, kind of a bit of a mixed bag this week. XRP, we're just talking about, they're off a bit. They were trading around 33 cents on our last show, down to 31 now. So they've kind of continued to been dogged by it. If they have a little bit of a pop, it's very short-lived, 35, 36, and right back down again. And they can't really seem to break much beyond that, and they still kind of seem to be locked around this 31 to 33 range for the better part of the last few months. And at least this week, that doesn't seem to be changing. ETH continuing the upside move, though. Again, another reason why it's distancing itself from XRP, up to 175 from 172 on our last show. And Litecoin, again, the big percentage winner on Q1, taking a break this week as well. 75.5 down from about 79 this week. Matt, we were talking earlier about your guys on the regulatory front with the futures. Seems like there has been some news on that front, not for the Bitcoin product, but actually in the altcoin realm in terms of perhaps an Ether future. The Coinbase reporting, I believe it was today actually, that their contacts, quote unquote, at the CFTC have told them they're willing to let an Ether futures contract go to market, and maybe sometime soon. So there does seem to be maybe a little bit of a crack showing in that dam. They said if a derivatives exchange comes to us and says we want to list this particular product, if they came to us and it met our requirements, I think there's a good chance that it would be allowed to be self-certified by us. So that's kind of interesting. I know you're offering ETH on the spot side right now. Do these comments, do they intrigue you, Matt? Do they maybe show that maybe the dam is breaking for you guys getting approved on the futures front as well?
Well, there's certainly interesting comments, unconfirmed, I guess, at this point, or at least not that I've seen today. We would be excited to learn that the CFTC was going to consider permitting an ETH futures contract, though I think that their request for input was at least indicative of an openness and a willingness to consider it, and we submitted a response in terms of the RFI questions, where we focused on the areas where we thought that we might have something to add. So, we will be keen observers of the process as it unfolds.
Yeah, the person quoted here is the typical person familiar with the matter who doesn't want to be identified. So you have to take those, of course, with a little bit of a grain of salt. The CFTC, not usually one to open the kimono like that ahead of time, but if this report is to be believed, then perhaps we're seeing some more progress on the crypto derivatives front than even we hoped coming into Showtime, which is interesting. That's good because I think you guys have some questions about that. Let's get to those with some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the questions segment. This is your segment, the portion of the show where you guys take the reins with your questions, your comments. This first one, Nicole maybe, or Nico L. Pick your poison here. Interesting spelling, but either way, they have a question that looks like it's right up the alley. What we were just talking about, they want to know, why aren't there more listed crypto derivatives outside of the Bitcoin futures? Of course, on the big quote-unquote listed venues like CME and SIBO, Bitcoin futures was the way that we went. We saw Kraken has listed them now. A few others have listed Bitcoin futures. Do seem to be kind of leading the dance, but as we just saw, maybe there's going to be some more openings in that going forward. Maybe we will see ETH and a few others getting out there in the near future. But Matt, you guys over there at ErisX are much more tuned into the regulatory process right now than I am. I'm curious, why do you think we haven't seen an expansion of the derivatives product suite really outside of that core Bitcoin offering yet?
Well, it's hard to say specifically. I have no insight into what any of the other exchanges that have launched Bitcoin futures have thought or what their plans are vis-a-vis futures for any other crypto assets. It seems like Bitcoin's been in the world the longest and has the greatest level of familiarity. And, I guess just with anything that's new and novel, it takes a bit of time for people to get comfortable. And so Bitcoin was the first to go out, and we're seeing how that goes, and I imagine that as the space evolves, we'll see whether others are to follow.
Yeah, I'm with you there, Nico L. or Nicole, or however you want to pronounce that. I've been hoping for some time. Of course, options, but I've kind of given up on that for the time being. I just want to see, I'll see more products. I'll take an ETH future. I'll take whatever we can get just to kind of expand the offering. Obviously, these are available on some other venues that you need to tunnel into with a VPN and things. That's not, I don't think, what you're talking about. You're talking about more of the big listed lit venues you can access readily and indeed legally here from the U.S. And so when it comes to that front, there aren't many offerings yet outside of those listed Bitcoin. But even talking to CME last year when I had them on a panel with me at a crypto event, they kind of implied that they were leaning more in that direction versus the options as well. So I thought by now we would maybe see, an ETH future or a few others. I think maybe the pronounced sell-off in the crypto space maybe impacted that a little bit as well. But maybe if these reports out of the CFTC are to be believed, then maybe that worm is beginning to turn. Maybe we will start seeing some other products out there at last. And then finally, someday, lo and behold, maybe an option on those products. That would be nice. Speaking of the options, GCMYD wants to know, say that 5 times fast, GCMYD wants to know, does put-call parity still work on Bitcoin options, or are the relationships different? Well, short answer is yes. If you find an option where that doesn't work, then there's probably some trading opportunities available there. 99.9% of the times, those relationships are going to hold. You get those weird aberrant scenarios immediately in the wake of a corporate event or things where things get out of whack. And that happens, and sometimes those are good times to trade them because they offer great opportunities. But in general, the call should always imply the value of the put, and vice versa. It doesn't matter what the underlying is. The skew is going to be different, the vol is going to be different, the other things are going to be different. But the mechanics of options don't really change unless you really start tweaking the contract specs and things. So yeah, 99.9% of the time, these scenarios are going to hold. And those 0.00001% of the times when they don't, you probably want to pay attention because something crazy is probably happening. And B, it may be an opportunity for you, the trader out there. I'm going to wrap it up here with an easy one. This comes from Alan. Alan wants to know, where do you get your data for the show? Well, we use a lot of data, as you might imagine, and it comes from a variety of sources. I've already sung the praises of the SKU guys. They've been on the show before. SK3W.co is where you can find that. I can't highlight that enough. That's great stuff. If you really want to sink your teeth into the volatility, the SKU, all the derivatives, fun stuff we like to talk about here on the show, that's the place to go. Of course, we've had Nick and some of his quick strike stuff here in the past. They've provided some interesting data analysis on SKU and things like that for the CME products over there. And then, of course, for market cap, there's a variety of sources. There's Coin Market Cap, there's CoinDesk, a bunch of places out there. Take those numbers, of course, with a bit of a grain of salt. And then, of course, the various venues like CME and others for where they're actually trading some of these products. So it's kind of a mix, a kind of a hodgepodge of places, and we filter it all down into the one tasty whole that is the Crypto Rundown. All right, unfortunately, that music, listeners, means we've come to the end of another epic journey through the world of crypto. I want to thank my guest, Matt Trudeau, the Chief Strategy Officer over there at ErisX. A lot of cool things in the hopper coming down the pike from them. Hopefully we'll see more very soon. And Matt, if listeners are intrigued, actually, before we even do that, before I have you tell them where to go, maybe if you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect from you guys in the coming months, now is the time, sir. The floor is yours.
Thanks, Mark. The two priorities we have for this year were the launch of the spot market and the launch of the futures market. We've gotten the spot market up and running, so pending regulatory approval, you should look out for ErisX to launch a regulated futures exchange and clearinghouse later this year.
I like it. And if people want to learn more outside of this interview, of course, Matt, about ErisX and what you guys are up to, where should they go? What should they do?
They can find us at erisx.com and also our Medium blog, which is ErisX Insights.
There you go. Check them out. Eris is just ERIS. So that's erisx.com to learn more. And on behalf of Matt and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, for all the other fun stuff that you do. Keep it coming. You guys are the reason we do this show, after all. And we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.